Hello everybody, back again with me, again with the 2019 paper. Yeah, 2019 paper. This is the counting part of the paper. Yeah, this is the favorite part for some. Not so favorite for some. Doesn't matter. This is the 2019 O level paper 2. Paper 2. Yeah, question number 5. Roman number 1A. What is the equity of a business? What is the equity of a business? Easy question. Provide me the answer. Just give me the answer. What is the equity of a business? Well, yeah. Yeah, we can say that. Yes. You're correct. Correct. We'll write it down. The equity of a business is the all the assets invested or you can say, children, the value of all the assets invested to the business. All the assets, the value of all the assets. Let's say the value of all the assets. That's better. Value of the value of all the assets. The value of the assets invested to the business by whom? By the owner. Yeah, by the owner. By the owner. By the owner. Or even simply you can say the value when total liabilities of the business, when the total liabilities are deducted or subtracted from assets, that value equals to equity. You can even say that the value of the total value of liabilities deducted or subtracted from assets, the value you get is equity. Okay, next question. Write two situations that the equity of a sole proprietorship business change. Write two situations, equity change. Equity change in a sole proprietorship business. Situations that the equity changes. I have told you enough times that these are the most fundamental parts of accounting. Okay, basic parts of accounting. Equity changes with 4 situations or with 4 transactions. What are the 4 transactions? Equity increases with these 2, decreases with these 2. Okay, increases with 2 and decreases with 2. What items increase equity? Additional capital invested, incomes or profits. What items decrease equity? Drawings of the owner, expenses or losses. expenses or losses decrease equity, drawings decrease equity, these two increase equity. Okay, additional capital and incomes. Okay, you can write all, if you want you can write all, but don't write all. If you want, you can, but they are asking only for two situations. Right? Yeah. Additional capital. Additional capital increase equity. Okay, and we'll write one more that decreases equity. Drawings decreases equity. Done. Moving on to the next part. Write the double entries for the following transactions. Double entries, easy peasy, nothing to think about. A, receiving a check of 7,000 from debtor Madhav. Receiving a check of 7,000 from debtor Madhav. Madhav is a debtor, he has paid us a check 7,000. What is the double entry? Tell me. If you receive a check, if the business gets a check, bank money increases. So bank debit, debtor credit. Bank account debit 7,000. Debtor Madhava credit 7,000. That is the double entry. Yep. Next double entry. This one. Nadun, who is a owner of a furniture shop, taking a dining table, 35,000 from his business for personal use. The most damaging transaction for me, of course. I don't like drawings. I don't like when owners come to the business and take the business resources, business assets, goods and all, even cash, whenever they want, wherever they want, however they want. I don't like it. Nah. It's damaging to the business. Drawings. What am I talking about? Drawings. Yeah. So we'll write the double entry for drawings. B. B. 35,000. Drawings debit. Drawings always debit. Drawings account debit 35,000. Credit what? Cash credit. Because if he takes cash from the business, cash decrease. So credit cash. But here not cash. He has taken not cash. He has taken a table. He has taken a dining table of 35,000 from his business for his personal use. He has taken a dining table. Now what? Furniture shop. taking a dining table from the furniture shop. The furniture is there to sell. No? This guy comes and this guy takes the dining table. He's taking it to his home. Personal use for the private needs of the owner. He has drawn goods. So not cash credit, goods credit. There's no goods account. Purchases account credit. Purchases account credit. Because there is no goods account in your level of your syllabus. There is no goods account. Okay, so the purchases account must be credited. Purchases account credit 35,000. That's it. Moving on. Following are how 4 transactions of Sahan's business impacted the accounting equation. So this is from the accounting equation. Accounting equation. 4 transactions of Sahan's business impacted on the accounting equation. First transaction, number 1. Stocks increase 15,000. Creditors also increase 15,000. Easy, no? Second, just tell me the first one. Tell me the first one. You have to know what this transaction is. Stock has increased. Stock has increased. Yeah, increased. Creditors also has increased. Creditors also increased. Yeah. Goods bought on credit. That's right. Stock of 15,000 bought. So stock increase when we buy new goods to the business. And on credit, so creditors also increase. Liabilities increase. Creditors, we have to pay them more. Second, furniture 25,000 plus, cash 25,000 minus. Is this a furniture shop? How 4 transactions impacted on? They haven't said anything about the business. We don't know whether this is a bookshop or a furniture shop or whether it's a beauty salon. Okay. Transactions of Sahan's business. This guy is the owner. Impacted on the accounting equation. Furniture he has bought 25,000 for cash. Because cash decrease when we pay cash. Cash decrease. Decrease. Furniture come to the business. New furniture come to the business. So furniture increase. Furniture bought for cash. Third one. Stocks 10,000 minus, debtors 12,000 plus, profit 2,000. Stock has gone out. A stock has gone out means stock has decreased now. A stock has gone out, maybe sold. Maybe a stock has been sold. I think that is the case here. Okay. A stock has been sold. Debtors have increased. More debtors have happened. More debtors have occurred as a result of selling to them on credit. So they have to pay us money more because we sold them again without taking money. Credit sales, selling on credit. So debtors have increased. And there's a profit of 2,000. Of course, if you sell 10,000 worth of goods for 12,000, there's a profit of 2,000. Sold goods, sold a stock worth of 10,000 for 12,000 on credit. So there's a profit of 2,000. Fourth one. Cash minus discounts received plus creditor minus. Alright, let's first see what we have to do. No, we are doing the question without even seeing what we have to do. Further, as at First 2019 Sahan's business total assets are 50,000 and total liabilities are 50,000. Okay. Required. Writing the above 1, 2, 3 and 4 transactions with values. We already did that. Of course, we did that. Done. Writing the above 1, 2, 3 and 4 transactions with values. We have done. See? But we didn't write. Okay. Shall we write? We'll write. Number 1. Stock plus creditors plus. I told you what is the transaction. Shall we write it here? So it's easy. Answer for A. First transaction is what? Bought or purchased a stock of 15,000 on credit. Purchased a stock of rupees 15,000 on credit. Done. Can you see? Okay. Second transaction. Oh no. I don't like it when my handwriting gets messed up, you know. That is it's a habit. Second transaction. Furniture 25,000 plus cash 25,000 minus. I told you. We talked about this. Bought or purchased furniture. 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 Of rupees 25,000. You have to write the values. Don't forget the values. They specifically they have asked to write the transactions with values. See, you have to write the values. Purchased furniture worth of rupees 25,000 for cash. Okay. Yeah, done. Third transaction. Third one. Stocks 10,000 minus. That means decreased. Debtors increased with a profit. Yeah, we talked about this one, the red one. Yeah. Third transaction. Third. Okay. This one. Stocks sold. That's why stock has decreased. For credit. That's why debtors have increased. 10,000 worth of a stock. What we have to do is we have to start it like this. A stock of rupees 10,000 sold on credit sold on credit. Sold on credit for 12,000. 4 rupees 12,000 with a profit of 2,000. Okay, you can write it. You can ignore it. When you say a stock of 10,000 sold for 12,000, it's clear that there is a profit of 2,000. If you want, you can write it with the profit of 2,000. Okay. Fourth one, cash 9,000 decreased. Cash has decreased. Okay. At the same time, discount received taken. We have received a discount 1,000, and creditors also have decreased. So if cash has decreased, we have paid out cash. No, we have paid cash to somebody. To whom? Creditors. So you can write it like this: 9,000 cash decreased, 9,000 rupees paid to creditors to settle their debt, or to settle their in settlement, to settle their money. We have paid 9,000 to creditors. The 1,000 discount is a discount received from creditors. 10,000 we had to pay. We had to pay 10,000, but we paid only 9,000 because they gave us a 1,000 discount. Got it? Will you write it, or do I have to write it at the bottom when I don't have space here? Tell me. You want me to write it? Okay, I'll write it, no problem. Fourth transaction. All right, cash 9,000 decrease. So you have to start it like this. You have to organize your sentence before you write it. Organize your sentence. Paid rupees 9,000 to settle creditors of rupees 10,000 and receive a discount of 1,000. You can write it, you can ignore it. When you say paid 9,000 to settle creditors of 10,000, paid 9,000 to settle creditors of 10,000, there is a very clear discount of 1,000 inside the sentence. It is not mentioned. If you want, you can mention. Okay, you can even mention with a discount of 1,000. You can mention if you want, or even if you don't want to write lengthy sentences, you can ignore it. If you write the sentence like this, paid 9,000 to settle creditors of 10,000, that clearly says that there is a discount. Going on to the B part. State basic accounting equation of business with values as at 5th October 2019 after recording the above transactions. State the basic accounting equation of the business on 5th October. So what you have to do is, first of all, you have to check the dates. On 5th of October, the transactions are done, finished. All right. 5th of October, the transactions are finished. Yeah, here transactions are done, finished. But on the next page we have on the next page. Children, that was the previous page, okay? Now I'm going to the next page. This one. On this one we have further at 1st October business total assets given. See, total assets given 250,000. Total liabilities also given. Liabilities also given 50,000. As at which date? As at which date? As at 1st October, beginning of the month. Beginning of the month. This is the beginning of the month. See, 1st October. These are what? Given assets and given liabilities are the opening balances. Opening balances, right? There's no need to show you with the all the Vannangs here. You have to realize that even though I don't dance and act out things or circle and square things with colors, you have to understand these things. Given if the balances or amounts, values given of a business as at 1st of the month, those values are the opening values of assets and liabilities. What we have to do is we have to state the basic accounting equation of the business with values as at 5th October, the last date. So the basic accounting equation is assets equals capital plus liabilities. Okay, we have to write the values as at 5th October, no? Last date. 5th October, no? Last date. Assets equals capital plus liabilities. Basic accounting equation as at 5th last date. So we have to do the calculations. We have to add and subtract and take the final values of assets. Okay. First of all, mention the opening balances on top of assets. 1st of October. How much? This much. 250,000 of assets. Total assets 250,000. Mention it on top of the assets. $250,000. How much of liabilities? I remember 50,000. Now you can add the additions and subtract the deductions. Okay, and take the final value here. Take the final value here. Here. There. Do your calculations. All right. No need to think further. Just do the calculations and take the answers. 250,000 plus 15,000. 265,000 plus 25 minus 25. There is no difference. 265 here. 265 here. Okay. There is a plus and minus, same amount. There's no difference. Then 265 minus 10. 255 again. 255 again. Plus 12. 267 minus 9. 258. $258. That is the final value. Equity, we have to take the assets and minus liabilities. We can get equity. Easy. Liabilities. 50,000 plus 15,000, that is 65,000. 65,000 minus 10,000, 55,000. We'll use red. You got the calculation right? 50,000 on top plus 15,000. 50,000 plus 15. 65. 65 here. 65 plus minus 10, 55,000. 55 we get as the liabilities. 55,000. 258,000 minus 258,000 minus 55,000. These are the assets minus what? Liabilities. The liabilities. Okay. Equals asset. Equals equity. Assets minus liabilities. Assets minus liabilities equals equity. So 258,000 minus 55,000, 203,000 is the equity. All right, hope you can see this. Equals equity. So what is the answer? Done. We'll write the answer on the other page. We don't have space here. Yeah. Here. Get the values again. Assets 258,000. Liabilities 55,000. Equity here. $258,000 equals liabilities 55,000. So capital is 203,000. Easy peasy, right? Easy peasy, yeah. Okay, that's it. State the basic accounting equation of a business with values after recording the above transactions. Okay, this is it. Done. Are we finished? Are we done? Oh no, we have another part. That is the monthly petty cash interest of Ruan Traders received for November 1,000. Petty cash payment for the business of the month of November given. Postal charges, traveling expenses, refreshment, three-wheeler charges. Yeah. Recording the above transactions in a petty cash book. Oh yeah, that's an easy thing. That's a simple thing. We have to draw a petty cash book. We have to draw petty cash. That's nothing. Recording the above transactions in a petty cash book and balancing it. All right, let's do it. Let's do it. No problem. No problem. Let's do it. We'll take another slide and draw the petty cash because we don't have space here. There you go. Okay. Let's draw the petty cash book. All right. Headers. The receipts column. Next we have the ledger folio column. No, not very necessary, but just draw the column because that is the format. Then date column, description column, voucher number, analysis columns. What analysis columns needed? You have to check. Analysis or analysis. We have postal, we have traveling, we have refreshments, and we have three-wheeler. Three-wheeler charges can go to traveling. Okay. So we need postal, traveling, refreshment, and three-wheeler charges. No. Three-wheeler charges can go to traveling. Postal, traveling, and refreshments with the ledger account column 4. With the ledger account column 4. Remember, the ledger account column is important. You have to draw it. Postal, traveling, refreshments, and ledger account. Postal, traveling, refreshments, and ledger account. Okay. Done. We need a perfect. Let's write it down. Petty cash book. Petty cash book for the month of what? For the month of what? Monthly petty cash impressed of Ruan traders received for November 1000. For the month of November. Okay, so he has received the petty cash impressed, guys. Okay, he has received the petty cash impressed. See, the petty cash impressed is received. Yeah, or already received. That I didn't notice. Did you notice that? Yeah, payments are given here. These are the analysis columns: postal, traveling, refreshments, and the ledger account column. There is no petty cash balance. Sorry, no balance. If there was a balance, you have to mention the balance, but no balance here. No balance. 1000 petty cash impressed is given. That's it. So for the month of November, okay, let's put the headers. Receipts column, ledger folio, date column, details column, analysis columns, this is voucher number. Voucher number, the voucher number. Analysis columns, we have postal, traveling, refreshments, ledger account, ledger account. Okay. Done. This is for the ledger page. There is no analysis column. There is no no analysis column here, right? From done. So the last column is for ledger page. That's not necessary, but I will not erase it. I'll just keep it. Only 4 analysis columns. Okay, 1, 2, 3, 4. Got it? Postal, traveling, refreshments, ledger. Let's do it. Let's go on to recording part. Date. Oh, don't come here directly. Don't come here directly. Okay. Record the petty cash impressed first. Receiving of impressed. Monthly petty cash impressed of Ruan Traders received 1000. Let's record that first. Let's record that. So month of November. So first of November, petty cash impressed received 1000. 1st of November. Date 1st, 11th. Receipts on the receipt side, because we have received money, 1000. Nothing on the payments. Oh, where's the payment column? Children, where's the payment column? Where is the payment column? Did I miss that? I missed it. The payments column. Where is the payments column? There should be a payments column. The payments column. That's the most important column. Right? Yeah. We can... Perfect. Now we have a payments column. Next to the details column, there should be a payments column. All the payments should be mentioned in this payments column. All right. Did you forget that? This is the details column. This is the payments column. Now it's perfect. Details column, you can mention cash because we get 1000 from the main cashier or cash book. That's it. Next, we can, now we are done with the receiving of Ruan Traders petty cash impressed. Yeah, received here. Now it's done. Payments. 2nd November, voucher number 1, postal 150. 2nd November, voucher number 1, 2nd November, voucher number 1, postal charges, put 150 to the payments column and to the analysis, relevant analysis column. Next, this is done. 10th November, voucher number 2, traveling 80. 10th November, voucher number 2, traveling, put the amount to the payments column. Why did you put here? Why did you put it here? Not here. Put the amount to the payments column. Then to the relevant analysis column. It's confusing sometimes, you know, I'm so close to the screen and I get confused with the columns. Yeah. Traveling column. Okay, done. Yeah, it's funny. Is it funny? I don't think it's funny. Done. 15th, voucher number 3, refreshments 200. 15th, voucher number 3, refreshments 200. Then put it to the relevant analysis column. Are we done? Are we done? Are we done now? No, we have another one. 29th voucher for 3-wheeler charges 200. I don't think there will be any 3-wheelers going these days for 200. No. They are charging hell of a lot. Yeah. 29th voucher number 4, 3-wheeler charges 200. 29th voucher number 4, 3-wheeler, let's put trishow. Let's put trishow or 3-wheeler charges 200. Put to the same, no, not to the refreshments column. Traveling column. Okay, that's it. Done. Okay, we are done. This is done, this is done, this is done, this is done. Recording, we took all the entries, recording the transactions in the petty cash book, and balancing it. Oh, we have to balance it now. I have to balance it. Not only recording, balancing it. Balancing. Most people get this balancing part messed up. Don't get it messed up, okay? Let's balance it. We have enough space. That's good. Here, draw your boxes or sum box. I call it the sum box on the same level in receipts column and in payments column. Okay, now check which side, which column is having the higher total, higher addition. Which column is having the higher addition? Is it this column, the receipts column, or is it the payments column, the higher sum total? Obviously it is the receipts column. Obviously, yeah, most of the time the receipts column is having the put that total addition in both sum boxes, just like you are balancing a ledger account. The both sides must be balanced. 1000. Now take the addition of the payments column. 150 plus 80, 230 plus 200, 430 plus 200, 630. Yeah, that is the total, right? 150 plus 80, 230, 230 plus 200, 430, 430 plus 200, 630, yeah. That is the addition, 630. If you want, you can mention the 630 here, but you don't have to mention the 630 here. Just 630. Just subtract the value or the total addition of the payments column from the received column total. 10,000 minus 630. Watch, 370. That is your balance. is your balance 370. You write balance carried down and you brought forward, you put the brought forward, or balance brought forward, balance brought down onto the debit side again, 370. So the balance brought down is mentioned here. Did we miss anything? Did we miss anything in the account, in the petty cash book? The dates of balance carried down. Balance carried down should be as at 30th November. Balance brought down should be as at 1st December. Done. Beautiful petty cash book, very orderly and neat and tidy. Yeah. So with that, we end this question and this video. This is the fifth question. This is the fifth question of 2019 paper, O-level paper. And with the next video, I'll see you. And we are going to take the sixth question of the paper. In another separate video, we are going to take the seventh question and finish off this paper. Do get together with me until the next time. Do your work, do the papers, work out the papers with me and without me. As I always say, do your work. Work hard, play harder. See you soon.